Hey, everybody. Welcome to the morning market briefing. It's Wednesday, May 13th, 2026. Hope you're doing well. We got Ben here. We got Tom here. Big three all here. And we got PPI coming in hot. Breaking news on the PPI. Tom, we are looking for a month-over-month reading of 0.5, year-over-year of 4.8. On the core, we're looking for 0.3, year-over-year at 4.3. How we looking?
We are looking extremely hot.
Uh-oh.
So year-over-year final demand, 1.4%. It's almost 3x the expectation. Last month revised up from 0.5 to 0.7. The ex-food, ex-energy, similar. The 0.3 blown out of the water, we got a 1%. And then, the super core, ex-food, energy, and trade, expectation 0.3. We came in at 0.6. And the headline number for year-over-year is a big fat 6. And so that's a little bit concerning, I would say, but I would say PPI obviously is going to be far more commodity driven, far more driven by the oil price. This is where it's going to show the most.
We stunt on the haters and losers, of which there are many, quite often. Today is just an absolute field day for the haters and losers, of which there are many.
Yeah. I mean, PPI is definitely, it definitely feeds into more of the actual stuff part of the economy, which is going to move the needle. I mean, if your oil prices go up, the price of producing anything goes up, and that's what we're seeing here. I did listen to the call yesterday, and the housing number I still think is the biggest, fakest news that anyone is focusing on. Two things that are the biggest, fakest news right now, and they both come from the Bureau of Labor Statistics. One is that housing and shelter costs are going up, and the other is that we are in a very strong and normal healthy hiring scenario. And so I think this number is accurate. I think that this is probably the highest we'll see. I will also say we've talked a lot about the long bond being a safe place to be. It's up to a 504. So if inflation is really spiraling out of control, which I would argue it is not, it certainly is taking a bump upwards. We're still only 2 basis points higher than we were last week. And so the rumors that the long bond was going to spiral out to 7% and we're all going to get, destroyed by higher interest rates. We're up, 15 basis points on the 30 years since the war started. Over the last 2 months, we're up 2 basis points week over week. Now's the time to continue to buy bonds. I mean, I said it on Monday's call. We need to be selling stocks. Stock market may potentially be too hot, and the bond market may be potentially too cold, and now's the time. I mean, I turned to Ben the other day. I was like, at what point do I sell small caps in my 401k and buy bonds? And I think today is the day.
Today's the day. So, yeah, I met with somebody that knew that's coming on as a client and looking to add fixed income exposure. And we were just talking about this, but just due to scheduling mishaps, much of our presentation was built in March. And I had to go back and kind of update everything, but specifically update the educational pieces on the bond environment, because it's like, hey, we're revising all these projections upward in terms of the yield you can be picking up.
I'll tell you what the third fake news piece is, that the muni bond index is still up 1% for the year, which if you trade muni bonds, I just don't know how in hell that is even remotely possible, because all bonds are getting popped aggressively over the last month, and yet it continues to grind higher. While, the ag, I would expect after today, is going to be down for the year, which includes munis, but is mostly, treasuries, corporates, mortgages, things like that. So I don't know how exactly they calculate that. Not only that, but issuance on munis is hitting multi-year highs. I mean, there's more bonds hitting the market in muni land than there have been in a long time. So there's more supply. Prices are way down, and yet the index is up. And that is our index. So I'm grinding as hard as I can to keep up with it. But that number is extremely hot for what's happening in the bond world right now.
Ben, how you feeling about it?
I mean, it's the 20.9% increase in producer prices for unprocessed goods for intermediate demand, which is, I don't really know what that means, but 20.9% is a lot.
It's a big jump.
That's month over month?
That's a year over
year. Year over year.
That's
like good grief.
I was like, that annualizes to $1 billion.
It's like 9% month over month, though. 80% of that was energy.
Yeah.
I mean, at the end of the day, we do know that energy is impacting a lot of industries, but I would also say it's like 5% of producer prices in the U.S. and like 3% of consumer prices. In reality, in terms of what they spend, it's not that weighting in any of these inflation indexes, but it is that waiting there. I mean, and if we look at the CPI yesterday, there's a lot of consternation about how services were just ripping, even if you exclude shelter and all these things. It's like, okay, well, the vast majority of that was a 20% increase in airfares. I'm like, why is that going up?
I don't know, maybe because one of them failed and then everyone had to get a new flight. And guess what?
Oops.
The closer you are to having to get that flight, call it hours, the more that price goes up.
And jet fuel getting obviously a lot higher. So, I mean, I think a lot of these things are, yes, it looks really bad and it looks like it's ubiquitous, but I do think that it's pretty much due to the Iran war. Now, having said that, I don't think we're getting anywhere closer to opening the Strait of Hormuz or ending the war in Iran. And so, yes, it can be blamed on the Iran war, but I don't know if we're getting any relief there.
I mean, I was looking at a couple interesting Twitter handles. They were cited in a Zero Hedge article that was talking about satellite photos of Karg Island, and one of them was at Tanker Tracker, which is I'm definitely going to keep tabs on that one on Twitter. But the interesting thing is they're basically saying that Scott Bessent's strategy for strangling Iran is, I mean, within hours of coming to a head. There'd basically be effectively no oil exported from Iran, that they're no longer going to be able to pay their military.
They won't be able to even store their oil, and I think that's the big thing. Which means they have to shut in production.
You got to dump it in the sea.
And they're saying now that there's like miles-long caravans of people with tanks on the backs of their trucks at the border trying to export oil that way and make a quick buck, trying to get it out.
Love that. Hustlers.
Just the people trying to do something. And, I mean, something's going to happen, but Bessent basically said, we've been on a 10-year marathon where we've sanctioned them to the point where their infrastructure has not been maintained, and now we're at a point where the chokehold is on, and it's within, we're at the final length of this marathon where Iran is going to be effectively neutered. The rubber bands are tight, and things are about to fall off.
Do you think if Iran threatened to dump their oil into the Strait, that the Europeans would finally come and try to open it up?
Greta would be there so quick.
Greta, middle name Tintin, would be there in a second.
Greta
she's been, I don't know if you guys have seen the latest headlines on Greta, but she has a boyfriend who was on the flotilla to save Hamas, and there have been widespread accusations of sexual misconduct by him
on the flotilla?
On many ladies who were on the flotilla there for peace, and no peace was found with that guy.
That's tough.
He's like, I want to say he's like Brazilian and much older than her, and was just.
There's a lot of things you can't do on the flotilla, and that's one of them.
He was a libertine taking liberties while trying to deliver freedom to the horribly oppressed people of Hamas.
Man, that is brutal.
Yeah, so shout out to Greta. She got mixed up with a bad crowd.
It can happen to anybody. Classic.
Yeah.
Wrong place, wrong time. Flotilla story.
A lot of perverts on those flotillas.
So it would seem. Ben, any closing thoughts as we kind of do the recap on CPI now that we've seen PPI come through?
I mean, I do think that the energy piece is, and we talked about it with small business optimism. I do think that, April represented a couple things that all came together at one time, and that was the energy price increase, as well as the shelter add back from last year, as well as the last month, really, where we're not comping over the tariffs. I think going forward, we're going to be comping over tariffs, and we already started to see goods prices. Goods prices are like 1% on a year-over-year basis. That's your tariff tax, by the way. 1% inflation in goods prices. That's not the 8-9% that a lot of people are thinking that would happen as a result of the tariffs. The issue with inflation right now is on the services side. It's on transportation services related to energy, and it's related to things like hospital services, and it's related to things like water, sewage, and garbage disposal services.
Things the Fed controls.
Exactly. I mean, at what point... So I think the Fed's job right now, obviously they're going to look at the inflation. I don't know if this changes with Kevin Warsh, honestly, but the traditional thing the Fed would do is they look at inflation, they say it's going the wrong way, therefore we're going to have to keep rates high or even raise rates. And I think that some nuances in order to say what can you actually control, because the reality is if the Fed raised rates to 20%, would hospital prices come down? I don't think hospitals are really that rate sensitive. If anything, they have a ton of debt and they don't want to, and they're going to have to pay higher interest costs, which means they'll raise prices. Same thing with the local garbage truck company. Like, is raising rates going to really reduce their prices? I don't think so.
No.
And so, if I put all that together, I actually think that the things that the Fed can control in terms of as they raise or lower rates, I think they've pretty much wiped those things out as much. I mean, we're seeing declines in used car prices again. We're seeing new car prices that are running below inflation. We're seeing shelter prices that I know they say is 3.3%. They're not going up 3.3%. I can tell you that. So they've pretty much killed everything that's rate sensitive. They've killed construction.
Yep.
So it's really interesting conundrum right now for the Fed, because in the services economy where you have this monopolistic behavior by certain people where they're inelastic goods or services like hospital services, what are you going to do? Like, you cannot control that from the Fed's not.
There's not a policy you can create that. Yeah.
Kevin Warsh or Jay Powell isn't going to go into the hospital and say you have to cut your prices on that. Now, pharmaceutical prices have gone down because of the policy that's coming in from the fiscal side, but it's a really tough scenario for the Fed because they're supposed to control inflation, but what is inflating they have no control over.
Yep.
I would like to issue a minor retraction. So the Brazilian guy, Tiago Avila, according to a quick Google, is actually one of her lieutenants.
Okay.
Her boyfriend is a Swedish surfer / photographer with noodle arms, but he was not the one doing it. It was one of her
it was her lieutenant.
close friends and confidants. Yeah.
Not her boyfriend.
And he allegedly misconducted with 3 different women on the flotilla.
Unbelievable disparagement of
our
sweet Greta.
Yeah, sorry.
Her boyfriend.
Yeah. So
I mean, you're just
Even
jealous.
so.
You're just jealous, dude.
yeah, you tell me. Nothing. I love nothing more than a hard bang. Literally, I'm talking about hair.
So I was gonna say, I think that was the
Yeah.
problem with the
Yeah,
lieutenant.
I love a Dutch boy haircut on a lady. That's my favorite.
U.S.-China meetings. Scott Bessent has been meeting with Vice Premier He Lifeng. Those are good pronouns. He Lifeng.
He Lifeng.
In-depth, productive, all the buzzwords. We're talking about, markets and the economies. But supposedly that's gone well. And we did get Jensen Huang's coming.
Yeah, he was left out of the initial itinerary, and then all these newspaper articles came out like Jensen Huang's not going. And so he met Air Force One in Alaska. They picked him up.
Let's go.
And now he's on his way to Beijing.
I mean, people don't talk about how the second largest economy in the world is run by a she, and that the vice premier is a he.
Yeah.
We actually got a great truth. It's interesting
Nobody's
who's
talking about she.
Yeah,
She's the man.
she's the man.
it's interesting who's going with Trump on this voyage. We have obviously Marco Rubio dressed like Nicolas Maduro, who I'm sure everyone's seen. But also he said it's an honor to have Jensen, Elon, Tim Apple, Larry Fink, Stephen Schwartzman.
Is this like a Tim Apple retirement tour? You know how like Jeter went to all the stadiums and is he just making the rounds and everybody's going to honor him?
Stephen Schwartzman, Blackstone, Kelly Ortberg, Boeing, Brian Sykes, Cargill. Cargill was interesting, I thought, on the grain side. Obviously, Boeing.
Said no one ever.
On the financial side, you got Jane Fraser of Citigroup, David Solomon at Goldman Sachs. And then on chips, you got Sanjay Mehrotra, Micron, Cristiano Amon, Qualcomm, and then also on the aerospace, Larry Culp of GE. So he says that she was going to give him a big fat hug. So
Careful.
we'll see what happens with that.
I wonder if Jane Fraser Never mind. We'll talk about it later. I'll say it later. I don't want to get canceled. We've already said enough about Greta. And I will say, super producer Hicks, who's been absolutely killing it with the what do you call them, the photos on the YouTube channel,
thumbnails.
If we don't get a Thunberg thumbnail with Tom and some hearts, you're doing it wrong. We got to get the rumor mill going. What are we seeing in rates, Tom?
So we're selling off a little bit. I mean, it's not extreme, at least relative to where we have been. Everything's off about 3-4 bips. 10 years at a 4.48, which I think is great value. 20-year and 30-year are right around a 5.03. So we're going to continue to push out duration-wise. I mean, things are incredibly cheap. Mortgages have gotten insanely cheap. We're going right back to the old playbook from a couple of years ago, and when we get this thing flipped around, it's going to be to the moon, baby.
I mean, I do think this is probably going to be the highest year-over-year inflation prints that we see potentially this year because of those things that I mentioned.
Yeah, I agree. I don't think. I mean,
it's all the oil, man.
I say it a million times, but I mean, we're going in, I guess, 2 weeks to go back to that fixed income conference that we sat in at DC last year, and they said inflation is going to spiral out of control to 6%. We're going to see, high fives, low sixes on the 30-year. We're now seeing that quote unquote spiraling inflation, and we are actually exactly where we were a year ago. If not slightly lower on the 30-year.
And goods prices are 1%.
Yeah, and it's so the narratives can't be the same. You can't have the fear that spiraling inflation is going to happen, then have it happen, and then have the results that you predicted not happen. We're not at $200 a barrel. We're not at 7% on the 30-year. It didn't get much higher than this when we were at 9% inflation. So, what is the fear there? What is the potential downside? The potential downside is in the low single digits, I would say, as opposed to in 2022 when the potential downside was in the
teens,
high double. Yeah, 40% if you're Silicon Valley Bank. So
right.
So
100%.
Yeah,
actually.
So yeah, they went to zero because their bonds went from $1.20 to 70 cents, and right now they're 70 cents. So the upside is $1.20. The downside really is 3-4% maybe. So we'll see how it goes.
Good stuff. All right, we'll wrap it up there. We will be back tomorrow. Hope you guys have a great day. Tomorrow is Tomorrow Day, so big time. Y'all have a great day.